Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken, and our model portfolio is up 8.41% year to date. Here at SPY Trader Now, our goal is to beat the returns of the S&P 500 buy and hold investor. Their portfolio is up 10.95% year to date, so we are trailing by 2%. Our goal is before the end of the calendar year to surpass whatever their number is. Currently, our stock market strength color signal is green. Here are some past returns for the model portfolio. Last week, the S&P 500 lost 0.45%. And we'll go through the charts in great detail throughout this presentation. We made no trades last week. Here are the trades that we've made so far in 2024. We have two open positions highlighted in yellow. I currently do have a long call position with a strike price of $580, and we're negative on that position right now, $152. Now, if the market continues to advance, that will turn profitable soon. If you want to see all my trades going back for the last 3 years, you can head over to this link. It will be in the description down below. Everything that I am presenting to you today will be in the description down below. If you want to see how I do this, go ahead and hit that like button, subscribe to my channel, and ring that bell to be notified when I post a new video. Here is our equity curve of our model portfolio for 2024 year to date. Here is the equity curve for the S&P 500 buy and hold investor 2024 year to date. And on a percentage basis, here are the two equity curves combined. Now again, we want our portfolio to be surpassing the buy and hold portfolio before the end of the calendar year. Here is the Fed Chair Jerome Powell. The next announcement is about in 1.5 weeks. Are we going to have a rate hold, cut, or hike? The expectation is probably going to be a hold, as they have done over the last 3 times this year. Now we are looking at things from the presidential election cycle theory. Depending upon what year of the election you're at, they have historical rates of return for the S&P 500, and here's for the NASDAQ 100. Currently, President Joe Biden is in the 4th year of his term. Historically, the 4th year of the presidential term averages 6.7% for the S&P 500. Currently, the S&P 500 is up 10.95%, giving you plenty of room to go up and come down and have plenty of volatility between now and the end of the year. All right, now we are looking at things from the bond market. And the bond market is saying stay out of the stock market because we have an inverted yield curve and we have rising interest rates. There's Warren Buffett, the Oracle of Omaha. And here is CNN Business Fear and Greed Index. We are currently in neutral at 48. 1 week ago, we were also at neutral at 51. Now we are looking at things from the seasonality outlook, which states that depending upon which month you are, you have seasonality probabilities. Now, currently, SPY symbol going back 20 years is going to give you a 58% probability that you are going to close higher in the month than when you opened it. The month of trading hasn't started yet. Now we are going to enter the month of June. Last month, the market increased 5.01% for the month of May. Now, keep this in mind. You have a 58% probability you're going to increase going back 20 years. Now you're looking at the same information, but now you're going back 5 years and 10 years. Now, for the month of June, you have a 78% 10 years and 75% 5 years. So we have a good percentage basis, and even next month is strong. 100% going back 10 years and 100% going back 5 years. And let's look at July for 20 years. In 20 years, July has been positive 79% of the time. So taking on a long position right now may not be a bad approach. Only because it looks like for the next 2 months, you're looking at somewhat of better odds that the market is going to do fairly well over the next 2 months. And then you enter into the summer doldrums. Now we are looking at things from a 20-year monthly chart, long-term outlook for spiders. And here you can see the long bull run that we have been in and are currently in. And you can see that we've bounced and have now breaking out, and we're still in new high territory on this chart. Everything is positive from a long-term bull market outlook on this long-term monthly chart. Now this is an intermediate weekly 5-year candlestick chart, and here is where we are at right now, and we're trying to determine what we're going to do. The negative portion of this chart is right here. This is the MACD. The MACD is coming up, did not cross above its signal line, and is running parallel. If this market falls down into this window and this MACD was to fall below and increase the distance between itself and the signal line, that would be pretty bearish. Then we're looking at more downside ahead of us than upside. So I'm watching this MACD on this chart. But basically, if we pull up and go up, if we pull out of this and go up, this is going to cross above, and that will negate this portion being at risk. Now we are looking at a daily chart going back 6 months. You can see the candlesticks very well here. And we've got some exponential moving averages, the 8, 13, and the 21 with this ribbon right here. So we can monitor what's going on. Now these are daily candlesticks. Now on Friday, that was a day when things started to look like they were going completely south. But this line here is where the market seemed to find its footing and find buyers and come in and close above what I'm calling this line here, 524. This is my line in the sand. Now, when we crossed 524 before, that's when I got out of my put position and took on a long call. And I'm still in that long call right now, and I'm upside down on that by $124. Now, if this market had continued to gone south, I would need to exit that position, especially if we break this line right here. But we did not break this line. So, and I also have my line in the sand right here. So I don't really want to be in a long call position below this line. I don't mind being in the call above this line. So this line is critical as far as whether I'm going to hold that position or what I'm going to do with that position. Now we are looking at a ratio chart of the NASDAQ 100 against the S&P 500, and it's an indication of risk on, risk off. Basically, when this chart is moving north, then that is risk on, which is good for the cubes and also good for the spiders. Now, over the last week, we've softened up dramatically. You can see that right here. And we've also reached a peak here on the MACD. It's coming down to cross, it's heading towards its signal line. These are all not good for a risk-on standpoint. So here's the S&P 500 in blue right here. So it did soften up, but it did find a footing here at this line, ironically, which has nothing to do with the S&P 500. This line here is actually for the ratio chart. This is another ratio chart of the equally weighted S&P 500 against the normal cap-weighted S&P 500. Now, in normal, healthy bull markets, normally the equally weighted, which is in lime green, beats the cap-weighted, which is the dark blue. And the ratio chart during this time frame is usually advancing and going north. It can still go down like it did from here to here, but you can see that there was a little bit of a market pullback during that time frame as well. but it does better when this is heading north. Currently, this is heading south, and it's south in a big way. But look where it's at. I mean, it's at rock bottom south. It looks like it's going to end up going north because we're at such low extremes right here. We're like in extreme oversold territory. You can even see that in the slow stochastics where it's at the bottom right here. Last time you've reached a similar level, which was right here, follow that up. Well, the market still softened up a little bit, but it didn't fall much. Then it found its footing and then went north. So if we can catch one of these legs here, that would be wonderful. Now we are looking at the VIX volatility or fear index. And here there are three ranges. The ultra low range, which is below this green line here. So all of this is the ultra low range, which is where we are currently at. This is the low range, all right here. And then up here in red, this is the upper range above this line and above 20 on the VIX. We are way down here. And look at on Friday's candle, massive downward candle. This is telling you that the fear is not in this market. And when you do not have fear in the market, what is the market going to do? It is going to head north. This is the S&P 500 in dark blue. So the expectation is that it's going to be heading north, and that in this range, you're going to be heading north on the S&P 500. Okay, now we are looking at the Thinkorswim platform. We have the spiders up here, 2-year weekly chart. And then in here, we have our cycle brackets because we are watching the cycles now to help give us market direction. We had a market low corresponding right here. And right there. And right there. And then this one here is corresponding with this one right here. Now, in addition to that, what we also have is the last cycle. This is the ideal cycle going like this one here. This is the ideal cycle with the low right here. Here is the actual cycle right here. And here in the midpoint on the minor cycle, actually there was no real pullback at all, just this little thing right here. And then you came in and then sucked down to here. Now, currently, we're looking at the minor and the major cycles coming out of this area right here. And that is right here where you have two energy forces pushing at the same time. And that is what should give this a liftoff into this resistance area up here, also making new highs right here, also making our long call profitable. Now, is that actually going to happen? We don't know. I'm just saying the cycles are telling us that we should have a probability that we should be able to get some upward movement over here over the next couple of months is what I'm thinking. So there is the minor cycle that's going to come down and peak sometime down in here. But outside of that, it's going to also begin to come up before you have both of the cycles coming down over here. Now, all that is due to happen. Let's just see here. This cycle, wait 1 second. This cycle is due to end on 11/24/24. So we've got a ways to go on this. This is even after the summer doldrums. This might even be the summer doldrums right here. So this one here is going to end on 8/18/24. So kind of during the summer doldrums period right there. So that is one of the reasons why I didn't sell out of my call position, because I saw that the cycle analysis is telling me that we should be in a rising phase right now, and we should hopefully come up into this resistance zone right here, and I've got my target reached. Now, if indeed we do reach this target, now the last time we reached a similar target, which was right here. Now, keep in mind, I've got standard deviations here. +1, -1 in pink, +2, -2 in gold. Last time we hit the +1 and then we softened up and came down. We hit the -1 right there, and now we're approaching but did not hit the +2. came down, hit the regression line, and now we're traveling north on these rising cycle phase right here. So I want to kind of stay into this position and see if we can hit our target zone here. At this point in time, if we do indeed hit that, then we will be taking our long call off the table, cashing in on those profits, and doing an in-the-money covered call or something like that. But we have to wait and see how this all plays out. And of course, the market can do whatever it wants to do whenever it wants to do it. If it decides to just come down and crash and go south, and you start taking out, you see this red line that I got identified right there at 494. You start taking out that low right there that was established on this double cycle low right here. If you start taking that out, well, then all bets are off as far as reaching this target over here that I currently have identified. Now, this target zone was identified because of a Fibonacci extension that I put in from this cycle low right here to the cycle high of this cycle right there, and then the low established right there. So I established that and put in this Fibonacci extension right there to help give me this target zone. Okay, now we are going back, looking at the same information, but instead of going back 2 years weekly, we're going back 1 year daily. So each one of these candlesticks represents 1 day. Now, inside of this chart that we have identified right here, we have our cycle brackets here as well. And on the daily chart, I've identified a low coming on 5/30/24, which is exactly right now. That is yesterday's day. So right there is what's on this that I have identified as a cycle low. And if indeed we are going to come out of this with this rising cycle phase, we should have some upward mobility at least until the 50% mark of this cycle right here. So next week's trading is going to really help us to see if this is going to follow the cycle pattern on the trading, or if it's going to end up doing something different. So we have to see how that's going to play out. All right, now here is a spreadsheet that I created in an effort to help me determine the strength and health of the overall market. These are different asset classes. These are the 11 sectors of the S&P 500. There's your symbols right there. The more green you have here is how green is good, meaning that everything is pretty strong. I only put greens if there's 5s and 6s. And so these are all 5s and 6s here in green. But there are 4 sectors that currently are not in green. And so the market lost a little bit of strength. Last week we were at 68. This week we are at 64. I put a lot of emphasis on whether we're trading above or below the 50-day moving average. -2 if we're below the 50, 2 if we're above the 50. And I can tell you that in a lot of these charts that are rated at 2, they are just barely above the 50. So this market is in a precarious condition where if it begins to soften up and head south, this is going to drop down dramatically. You're going to be below. It's going to drop us from the green into the yellow very quickly. It's only going to take a few more that go below the 50 in order for that to happen. But we'll know within the next trading week what direction this market is going to go in. But currently, we have greens on both asset classes and also on the 11 S&P 500 sectors. Now, this chart here is a 1-year chart of the 10-year bond yields. That's the candlestick chart. In dark blue is the S&P 500. In black is TLT, 20-year bonds. Now, the 20-year bonds, they work opposite the yields. If the yields are traveling north, bonds are traveling south and vice versa. So what's happening? The bond yields started to travel north and reached a peak just above 46 and started heading south. Well, the market did correct during that time, but not by much. There definitely was a pullback, but the market is seeing that the bond yields are dropping and it will continue to advance. The market would love it if this bond yields would come down and get below this blue line here. Then you'll see the market really take off. But the market will do okay as long as it stops ascending and starts descending. And look at your MACD and your slow stow. MACD is coming up topped and is starting to go parallel to potentially down. Slow stow is already below its signal line and below 80. If that continues this way, the market is going to go the other way. Okay guys, I just gave you a ton of information in this video. Now comes the critical thinking. What are you going to do with that information? Well, as of June 1st, 2024, the market summation, according to me, Ken, your friendly host with SPY Trader now, we have just started a new cycle, which I showed you, and I'm expecting upside movement. That's why I have the long call position, plus my 200 shares of SPY. The ultra-low VIX supports this thesis. We have our line in the sand identified at 524. I showed you that on the chart. Below, we will explore short positions below 524, and above, we will explore long positions. We will do this and reevaluate at mid-cycle, which is about 6/17/24 or 2 weeks from now. I evaluate this every week in detail, as you know, on these videos. But this is kind of like the game plan that we have in place right now. Now we have to see what the actual stock market is going to do. So we watch it every day and we see what it's going to do, and then we review this and put out our weekly videos. I hope you got some valuable information out of this video. If you have not done so already, smash that like button down, subscribe to my channel, ring that bell. I thank you and wish you good trading.